JPMorgan kicked off bank earnings season this morning, posting stronger than expected earnings results at the height of the COVID-19 pandemic. Joining us now to discuss is Fred Cannon, Global Director of Research at KBW, a Stifel company. Fred, good to speak with you here. I definitely want to talk about JPMorgan because what they did, it was just a really impressive quarter from them. I do want to start with Wells Fargo, though. We had a guest on our last block saying that this company is a train wreck. What is the next shoe to drop at Wells Fargo? Because clearly this can't continue. The company slashed its dividend by 80%. You look throughout the quarter, it was not good. In fact, it was just really ugly.
Well, they have a lot of stuff to get behind them. But I also think when we contrast that with JPMorgan, you have to recognize that Wells Fargo doesn't have that capital markets capability to offset a lot of these other charges. So they're light on capital markets. They face this net interest margin pressure that's tremendous across the banking industry, and they have to build these big reserves for future losses. So I think it's a tough situation for Wells Fargo, and I think it reflects a tough situation for the basics of banking.
Now, Fred, Charlie Scharf, CEO of Wells Fargo, he's known to cut costs. Is that the next shoe to drop here before year end, that there could be a pretty sizable cost-cutting plan put in effect?
So I think two things. One is that I do think he's going to come after the cost of the organization significantly. One of the things about this pandemic is there's a realization that these large branch networks, people got by without them for the last 6 months, largely. And I think there's a lot of costs to save. In addition, he built the reserve in a big way this quarter, obviously taking that hit to the dividend. But to the extent that they get some of this credit cost behind them before the credit hits, I also think it can position them going forward.
Want to get to JPMorgan now. Quite a different story from Wells Fargo, right? I mean, they too setting aside billions for possible loan losses. In the case of JPMorgan, more than $10 billion, but they are also benefiting from record trading revenue. Do you think, to your mind, I mean, we still haven't heard from the rest of the banks, but is JPMorgan the best positioned to ride out this pandemic?
Well, that capital markets business is really benefiting them right now. Of course, we don't know the answer to that. And I think Jamie Dimon underscored that during his press conference, right? Is there's a lot of things to go before we know the answer to that. Can the capital markets activity at the levels that we're seeing it continue? I mean, we have a great equity market right now, but there's some question marks from your last speaker who talked about that. So there's a lot of uncertainty left. But yes, relative to the traditional bank peers such as Wells Fargo, you do see the JPMorgan diversified business model winning at this point in time.
Fred, could you break this down for us? I'm just looking over this JPMorgan quarter. Assets under management up 15%, investment banking revenue up 40%, markets revenue up 77%, fixed income up 99%. How is this company pulling this off during a global health pandemic? Well,
I think, remember, you have a couple things going on. You have this huge Fed infusion of liquidity into the market, and you have the CARES Act behind that. And the result is we're seeing a lot of activity in the markets in terms of interest rates have come down so much that there's a tremendous amount of debt capital market activity going on. There's a tremendous equity markets, as we know, are robust despite the pandemic. So these factors have been a real positive surprise for those firms such as JPMorgan with that big capital market activity. Plus, let's give a nod to JPMorgan. They are executing their business as well right now.
What's your take on Citigroup? Are they executing to their potential at the moment?
Always a good question what their potential is. I think that Citi is, like the other firms, their capital markets is good, and that helped them a lot. Again, it helped offset the higher credit costs that they face. Citi doesn't have the underlying earnings power of JPMorgan in our view, but I think they're performing reasonably well during this time period. And if things don't deteriorate further, we think they can maintain their dividend just like JPMorgan, but not like Wells Fargo.
Right, one more on JPMorgan. They mentioned on the earnings call this morning that 33% of their commercial loans are levered to COVID-19 sectors. How do you think that will play out the next 2 quarters?
Well, that's the big uncertainty, because really a lot will depend on what happens with the Phase 4 program from the federal government. We have to recognize that a lot of the strength that we've seen in the banks to date, in terms of savings rates, in terms of consumers paying off their loans, in terms of consumers and businesses being able to get through, is the result of the CARES Act. So a lot of the answer to your question will be what is in phase 4, what's going to happen to state and local governments, what's going to happen to these sectors that can be hard hit. And I think there's a big question mark out there, and that's why these banks are building these big reserves to be prepared.
And Fred, any read-through, Goldman Sachs earnings out later this week. Any read-through from what JPMorgan reported to Goldman?
Yeah, I mean, you got to think that these capital markets focused companies, I would say both Goldman and Morgan Stanley are set up well for strong quarters. They should be, do just fine in this. It's really the spread lending banks where you have this pressure from net interest margins, and we saw that at JPMorgan, and credit costs, and you don't have that offsetting capital market activities where the banks that are going to face some pressures.
All right, I'll leave it there. Fred Cannon, Global Director of Research at KBW, a Stifel company. Good to see you. Enjoy those earnings calls.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.